Jobs Week in America, and joining us right now with a look at the trading week ahead is Stephanie Link. She's the Chief Investment Strategist and Portfolio Manager at Hightower Advisors, also a CNBC contributor. And Stephanie, here we go. The start of a new week. We've got mostly decent signs for the economy, but there are a few signs of concern, particularly if you look at Chicago PMI. How are you feeling about things overall?
Yeah, I mean, it's a new week. It's a new month. I think the economic data last week, Becky, was definitely on the mixed side. But I do think we are still pointing towards kind of soft landing and also above trend growth. Something like 2.9% we've grown in the last 4 quarters. I think it can probably grow 2.5% or so if you kind of look at what the consumer is doing and you look at what kind of pockets in manufacturing are driving the better than expected growth. So when I look at the consumer, the most important thing I'm looking at is initial claims and jobs, anything tied to that. So Friday will be a very big deal. But I do look at the spending patterns and personal income, 4.5%. It's still pretty decent. And then, as I mentioned, in manufacturing, there are pockets that are doing well, especially tied to aviation, especially tied to onshoring and grid and power and that sort of thing. So I think kind of 2.5%, maybe even 3% this quarter is enough to drive earnings higher and keep margins elevated.
We've been talking a lot about NVIDIA this morning, an amazing month it had. In fact, the chart you look at today, it's up another 3%. And since May 1st, that chart is up by 30%. You're looking at the year to date up by more than 125%. Obviously, AI is a big driver, but what do you think more broadly, not just NVIDIA, but the rest of the AI space?
I mean, it's massive, right? And the semiconductor companies, they're able to monetize it. The problem with software and AI is they're still in product development. They'll have their day for sure. And that's an area where you really want to watch out to look for some bargains. But in the semiconductor space, I mean, the momentum is just huge, Becky. And it really is all about these new products that they're announcing. I mean, I thought NVIDIA's did a very good job at the conference last night, recapping GTC in March and talking about expanding in the enterprise and enterprise verticals and inferencing and all of that. I thought actually AMD had an interesting take on the PC cycle, which is also just beginning. They have a number of new products for PCs with AI that's 5 times the performance. And it's much better than Qualcomm and Intel, according to them, of course. But we're starting to hear from Dell. We're starting to hear from HPQ, now AMD, about the PC cycle. We haven't had a PC cycle upgrade in quite some time. So that's an area where I think is also an area where you can see pretty good bargains.
Well, that's what I was going to say. I mean, obviously, the semiconductors are the ones who are actually making money on this, but they've also got the earnings appreciation or the price appreciation that reflects that. Yeah. We had a couple of venture capitalists in here last week, Mitchell Green and Alan Patrikoff, who both said that the price ranges, especially when you're looking at software companies and things, are kind of outrageous given that they haven't caught up yet. Do you see bargains in any of those places, or is it simply you got to play it to the second or third derivative before you can really find things that make sense to you right now?
I think one of the areas that has been very lumpy is in cybersecurity. And I actually think that cybersecurity is going to be just as big as AI. And yet those stocks some of them have had nice runs. We saw Zscaler last week. CrowdStrike has been great. But on the flip side, you've had Palo Alto and Fortinet not do so well. So I think you want to look at which ones haven't done well, because I think the total addressable market in cybersecurity is something like $2 trillion plus between now and 2030. And I think what you're going to see in cybersecurity is massive consolidation. Because if you talk to any CTO out there, chief technology officers, they will tell you that they're spending on 2 things, AI and cybersecurity, because they're afraid of losing their jobs. So they're focused on cybersecurity. And AI, obviously, they're spending because they're trying to figure out this new technology and what it means for their businesses. And so I think what you're going going to see within, again, in cybersecurity, though, is there's so many companies out there, and a lot of them don't talk to each other, which is why it hasn't really worked. And so I think you're going to continue to see companies get big, the big companies get bigger and bigger over time. And so I think you want to own like the top 5 names. And so that's where I see the opportunity.
We did see a pullback, though, in some of the technology names last week. I mean, what does this tell you? You look outside technology for other places that you want to be?
Yeah, I mean, I think last week was sort of interesting. Yeah, we did see some weakness in the technology sector. Yeah. Oh, yeah. Well, of course. And Dell, but actually the other sectors took up the slack. Energy did well, industrials did well, materials did fairly well, mix on consumer. And so that to me is healthy. If one sector goes down, if you will, that it's picked up from other sectors. And I think the reason you're seeing that, Becky, is because earnings have been pretty good across many different sectors, many different companies. It's not just been all about tech, which is what it was last year.
Right, right. Stephanie, I'm really intrigued by this new idea that you say you're watching. Nike, you haven't jumped in, but what do you see there that is kind of piquing your interest?
Yeah, it was all about Foot Locker last week. And the fact that the stock actually has lagged substantially over the last year and a half. So Foot Locker reported a very good number. And you know, one of their biggest partners, their biggest partner is Nike. And the CEO was on your show. And she basically said that they have great new innovation that she was excited about. I also did some homework on their global market share. That's actually remained pretty stable. My interpretation before I did the homework was that they were losing market share to the Hokas and the Ons of the world. They might on the margin, but the global market share in footwear has actually been pretty good. And they have in the second half of 2024 a whole new product innovation cycle story that's just beginning. So maybe I'm a little early here. That's why I haven't bought it just yet. But I do think once they start that spigot of new products, it could be really very exciting. So that one is on my radar.
All right, Stephanie talked about quite a few stocks here. So let's go ahead and just jump in and start analyzing some of these stocks. The first one, of course, on everyone's mind is NVIDIA. Of course, NVIDIA is king. Everyone knows NVIDIA. Everyone has talked about NVIDIA. Had a fantastic quarter this past week. They're announcing a 10-for-1 stock split coming on the 10th of this month, so about a week from today. We're hovering around a little over 1,130-ish. That 1,200 mark has seemed pretty kind of juicy here. Multiple gaps up on the daily side here, still after the earnings, still showing strong. We could see some weakness coming through if we start breaking below that first initial gap, which is around 1,062. So if we see some more downside coming in, we could see that come back to at least that first gap or even back down to that $1,000 range. Just again, NVIDIA is a key market thing. Next one, of course, secondary to AMD with their announcement is AMD, sorry, to NVIDIA. We're coming in here. This thing is not as strong. As you can see here, the last earnings gap down, bounced off. This is again on the daily side, the 150-day moving average. Kind of played around with that little line here, tickled it a little bit. We're trying to see it come back up. It's coming up to that nice guardrail that we like of the 50 SMA here, looking to see this consolidate potentially and see on the next move. AMD did announce some product stuff coming out as well in 2025 and 2026, coinciding with the NVIDIA announcement this past weekend. Next, we're going to be going to Dell. So Dell just had a quarter last week. Sums it up pretty good here. Pretty large drop. The run up into earnings was pretty dramatic. This is again due to the cycle that they and CNBC has talked about of the new PC gen recycle. We haven't had this cycle for quite some time. This will take time to play out. I think this was a very early mover at the beginning of the year. Made some consolidation. That first earnings basically in February got on everyone's radar. Still above the 50 simple moving averages, which is key for it to stay healthy and relevant. But just keep an eye on it. That gap down is pretty large. It needs to consolidate and kind of get its act back together to get back up at new market highs, which again, I do believe that it's a fantastic stock. Coinciding with that, we're going to look at Hewlett-Packard. Same kind of thing. Great earnings in February of this year. Wow, I didn't know HP deals with NVIDIA and the server side things. Of course, NVIDIA has these amazing GPUs and core structures, but they need different racks and different switches and so forth to run these, and HPE works very well trying to get into the enterprise realm for the AI move. This thing has been very lackluster ever since that move in February, has not seen those highs, and it's kind of been bouncing around. We do have a key earnings report coming out the 4th, which is tomorrow, and I believe it is after the bell. Yeah, it is after the market bell, so be mindful of that. With that, we do see some SaaS companies coming into some pretty heavy damage here. We're looking at Zscaler. This thing has been at a pretty large downtrend ever since its high of the February timeframe of this year. We were kind of just slowly sliding down with the quarters not too optimal. They're not fully integrating to the full extent of AI yet. Again, Stephanie hinted that, hey, this is going to take more time to play out. I think these are just the first early movers, and some of the expectations were a little too large. Talking about more of the SaaS cybersecurity companies, you can't mention it without CrowdStrike. CrowdStrike has not reported earnings yet, coming out tomorrow, or the 4th after the bell. It was dragged down due to CRM, due to Palo Alto networks, all these things that has had a beautiful run for quite some months. Again, those earnings have been very kind to a lot of these stocks, and it's kind of just hovering, kind of consolidating around the 50 SMA. I do really like it here on the weekly side. So this is a weekly chart here. It's hovering. If it stays around 316 to 300, I think this can consolidate after earnings. If it does have a pullback, if it rips higher, it's going to be a field day for sure. On the flip side, Fortinet, we're going to look at this one. This, again, kind of been dragging lower. This one is below, we're back on the daily side here, below the 150 simple moving average. The 50 is curling over. Very choppy action. We do have a lot of volume coming in the last 2 or 3 days, but we'll see how that continues. Keep an eye on that one. And then we're going to look at PANW, which was another one that she discussed on, again, the cybersecurity side. This thing is a little bit better than Fortinet that we just looked at. Again, that February earnings was not polite to it. It took it around the back of the shed. Literally went from, 362 to basically almost $90 price drop down. Had a small pop up, but now it's kind of been hovering around the 50 SMA here on the daily side, trying to get some work going in here. Earnings report wasn't too bad. It didn't drop as much as the previous one. I think it's really just the market trying to get their expectations in line of how these enterprise software, enterprise cloud security companies are going to be able to more or less set up for the future. Because again, all we talk about now are chips, chips, chips. We're not talking about UTS chips. We're talking about the NVIDIA, AMDs, Intels, and all the semiconductors, the MUs, and so forth. Can't talk about SaaS without CRM. CRM got obliterated. I don't think they're completely behind on the AI trend, but I think, like I've just mentioned, the market is maybe overemphasizing and has to recalibrate on what they view on the AI enterprise SaaS company plays. This thing is pretty much beaten down low. We're looking back at the lows of over a year ago. This is one of the largest drops that CRM has ever had in its history. Pretty dramatic here. I think some of the value plays would be coming in here. This is something that I won't like to bottom fish because it has been beaten down. I would like to see some consolidation come through before I take a bite out of it, if you know what I mean. And the last very part of the segment, Stephanie talked about some shoe companies. So she's looking and eyeing at Nike. So Nike's kind of been falling off again. Really bad earning report coming out the beginning of the year. Talking about market share in the U.S. You have a lot of the newer brands, the OnCloud, the Hokas, all the decks, and so forth, coming out with stronger shoes here in the United States, but she hinted on Foot Locker. So let's go take a look at that. So it's ticker symbol FL, as a really good earnings report, which is quite surprising here. And again, that was a large jump up. One of the largest partners, of course, is Nike, as she highlighted. So this could be a forerunner for potentially Nike of showing a more stronger earnings potentially, or somewhat, do I dare say a turnaround story with Nike. So if we look back here at Nike here, well below the 150 SMA, we don't like to see that. It is potentially doing some kind of double bottoming. I do like this very tight action here. These candles are very tight, very small, and we're not seeing too much selling here. We are seeing a little bit of consolidation here, which I like to see, but it is well below the 150 SMA. A nice run up and a breakout above 95 could be somewhat triggered to that magnet of 100, the Livermore number that we like to call it. On that front. So Nike, their competitors, of course, is ONON, which is on cloud, on holding. This thing has had an amazing year, coming off maybe building a bull flag here. Again, healthy above the 50, above the 150, and actually they're profitable on EPS growth. Last but not least, we're looking at Deckers. This thing had another fantastic quarter, jumping up over $100 here and continue to run here the past couple days here. Really just taking a lot of market share, with Deckers being, a larger conglomerate of many shoes, not just Hoka's. They have the Uggs and so forth, and making a very large comeback in that sense. It did have a not so great start of the year. It kind of was flat, came down on some news, kind of been consolidating, but if you see, it never broke past the 150 SMA. It did break pretty dramatically here on the 50-day, but looking strong here and continue to potentially rocket higher here. Again, thank you so much for watching. If you please, or have not already, please like and subscribe for more fantastic analysis of your favorite stocks. And again, catch you guys on the flip side. Peace.